Hey guys, Will Sebastian here with another video. Did a stream this morning, go check it out if you haven't. And under this video, I'm going to leave my free training. The pound New Zealand, I've done lots of videos on, and I've covered it a lot of times in my streams, but I'm going to do another one just so everyone is absolutely clear on where we're at. Okay, so if you follow me, you will know that I've described many times how we come off from all these key moving averages. In other words, the last time you hit your closest moving average, okay, it was all the way over here. It was March time 2023. So March this year, okay, let's say about the 23rd, let's go for about the day it is in August now, 5 months or so ago, you haven't touched your closest MA, your 20 moving average. So that says a lot, okay? That says the price has rallied extortionately high. So I spoke about how we need to look at shorting it and how we need to do that with higher time frames, because once the rally gets so extreme, you really need to open your eyes to the broader market. So I said to short up here, okay, I did a drawing of it and everything like that. So hopefully you did, because now what's happening is you're getting this pull down. And lots of people are now asking me, okay, well, you got that call right, great, as well as Euro New Zealand, Pound Ord, various other assets. But what now? What am I looking for and why? Okay, so like I said, I did do this on my stream, but this is a little bit more in depth for everyone. So the reason why we went short, like I said, your stochastic oscillator is way high. You're way off your moving averages. And not only that, if you flick to your monthly, how many green candles do you really need until you decide, you know what, maybe this is a short, okay? January all the way to August is quite a long time. 7 or 8 months, it's come straight up. You get past your midpoint where these MAs, these key MAs exist on your monthly. You go out of your sideways movement and you're coming back to where you had previous price rejection. So that's your next point of reasoning for shorting, because you're coming up to the same area where you previously had an enormous fall. Look how far it comes down, 217 all the way to 185. And you'll notice as well, preceding that is a move from 181 all the way up to 217. So these massive moves that occur take you to these extreme price action levels where you've seen large falls previously. So understanding that is literally lesson number 101. Now, the reason why this went from there is because if you look to the left, you can see a little bit of price action there. But like I said, the main reason is because you'd come up for months and months and months with a minor dip, then you get this flash up, and then you get the fall. And you also notice, again, that stochastic oscillator is way high up after coming way far down. Now, remember, it doesn't mean, so you can see the stochastic oscillator came up when we're at May time on this candle. Just because it's up doesn't mean it's going to fall tomorrow, and doesn't mean it can't keep going higher. And that's exactly what you saw again here. All right, so those were the reasons why we shorted, mainly reading off what has happened before. We've seen it once. What do we want to do in the future? Okay, so within this is now the next part of the move, what we're looking for the future, and of course why. In the UK at the moment, I live here, I spend pounds. If I wanted to go to New Zealand, I'd have to pay pounds to get my New Zealand dollars, quite a reasonable rate. What I'm looking for, simply, if you look at your moving averages, again, we're on the daily, but look how far you are off them still. I'm looking for price to close up. Now, I know that what exists here, just over 212, is a reasonable level of support. The better level of support is down here. So I wouldn't expect anything to change that much until you get lower, all right? Now, a move that far down is not really going to be shocking, because if you look, it's happened so many times before. Within these uptrends, guys, remember you have to have these pullbacks, and sometimes the pullbacks are quite sizable in relation to how far you've just gone. So you've just gone from 206 all the way to 215, just over 215, let's say 216 almost. That is a long way without pulling back significantly, and you've hit key price action on your higher time frames, all right? So that's what's causing this red candle to form, and that's why I said to start to get short here, because you can see if you look back to the left on your higher time frames, other areas where you've previously had that go on, most notably where I am now. You can see that the top of that candle coincides with this. this leg down in the market. So you've got your reaction now, and this red weekly is forming. Now you can see as well, if you look here, that is your most recent strong PA. So pretty much what I'm saying is you can take gains now if you had them. That's absolutely fine. And you can ride this down, or you can simply just wait. Okay. Now it's likely I'll pull all of or a significant part of my position off a bit lower, because I can see actually there is price action levels that exist around 212. And because I'm an active trader, I'll probably look at trading a little bit more heavily. Okay. So that comes because of this candle wick you can see here. All right. So top of that candle wick is what I'm referring to. The high of, you can see it here, just over 210. And then if you go slightly better than that, you can see just back here, there's a few candle wicks, more or less circa just over 212. So I'll probably lock in gains nearer there, but I wouldn't be shocked, guys, if you get near this 20 MA and near your 210 ultimately. That is the ultimate target for swings. How long that will take is yet to be seen. We've got news coming out soon and further important news as the week goes on. So really all I'm looking for is most likely a move over to 210 so I can liquidate. Or perhaps I'll take some earlier and close later, just to get everyone understanding how they can use these key moving averages to track price in rallying markets. So I hope that helps as always, guys. I'm sure that does give you a good breakdown. Again, with your stock, I expect that just to peel off just a little bit and you to catch up with these MAs. Like I said, price just gone far, far, far away. As you've seen many times throughout history, it pulls back. Okay, that's what we're looking for. If you drop those time frames, that is not strong, is it? Looks very weak. So I'll probably start to take gains soon, lock in profits, and go from there. Thanks for watching. See you in the next one.